Hey everybody, Economic Ninja here. I hope you're doing great. I am actually feeling pretty under the weather right now. So if I sound a little groggy, a little tired, I am. So just wanted to let you guys know that ahead of time. We're going to talk about what's happening in the markets right now. Specifically, we're going to be talking about the stock market. We're going to talk about the gold market and some videos that I've done for the last 6 months telling you that I believe that we see the correction, or what I believe to be the greatest crash next to, could be as equal to the Great Depression starting this fall. And it is lining up exactly how I've been telling you. I've been saying that you're going to see precious metals dip as we start to see a liquidity crisis. We're going to go through some really interesting headlines, and I'm going to paint a very broad picture for you, okay? Because I think right now, more than ever, people need really basic fundamentals or basic understandings of markets and their dynamics to be able to make good decisions. Now, with that being said, this is literally the opposite from technical analysis. You'll see in a second when I show you guys this stuff. If you want to learn technical analysis, swing trading, things like that, I'll put a link to John's, JB's class. It's amazing. And I completely think that for the money, it is literally the best education you can get. So if you want technical analysis training, this is not it. We're going to go broad overview. Also, I want to say too, could you do me a huge favor? Because I put little tidbits of information in every single video. And I'm very broad in the type of videos I make because I've been an investor for so long, well, since 1998, but in many different markets. And I've been an investor in the upswing of the dot-coms and in the upswing of real estate. And I know what it's like to see a correction. I know what it feels like. It's not my first rodeo. And I moved out of both of those. And now I'm positioning myself into a sector that, quite frankly, everyone hates, but everyone's about to talk about it in the next couple of years, right? So with that being said, I've been talking about this correction that's coming starting in September, moving in towards the December area timeframe. And I put it out a lot. And so if you haven't seen those videos, it's probably because you've been unsubscribed and you're not getting those notifications. So if you could do me a favor, hit the bell icon and hit the subscribe button and the thumbs up, and let's get this algo going. All right. So today, right now, gold is down. It's pretty significantly down. We're going to go show you that. We're going to get to some charts. So I'm going to be on CNBC right now as of the filming of this video. Dow Jones up slightly, S&P really marginally down. Nothing really big, right? We've got a lot of stuff affecting the markets. The wealth effect is now being shifted. It's the real estate wealth effect is being shattered. What people thought they had in the bank when it comes to their home equity is being shattered quickly, and there's nothing but doom and gloom. By the way, guys, I have another channel. It's called the Real Estate Ninja, where I'm going to be focusing on real estate, but also how to make money in real estate. But a lot of it is going to be bad news for quite some time, but that should be exciting to you guys, right? Well, right now, if you look at the 10-year, it's moving strong, which means mortgage rates are going to continue to go up. And I believe that you're going to see an 8% mortgage at minimum by December. Why do we know this? Because the Federal Reserve is shooting for a 4%. That's crazy in this day and age. Fed funds rate by December, January. And when that happens, it's going to move mortgages up swiftly, okay? Now, I do believe they're going to pivot, and that is going to be because of an equities crash, and it's already forming. So I'm going to explain that in a second. So stick with this. Okay, let's look at gold. So gold is down huge. A 2% move in gold is a big move, up or down, either way, right? Silver, 1.5. Actually, silver has been doing really well the last couple of weeks. But I've been telling people that this is not professional trading advice, right? Not a professional. But this is akin to what we saw when Lehman Brothers crashed. And I'm going to explain that in a second. Now let's move on to the dollar. As of right now, the dollar is actually down nominally. Not that big of a deal, right? But you would think on a normal day when gold, this isn't normal for gold, gold's trading down 2%, and the actual DXY is down, right? Usually when the DXY is strong, we see gold weak. But this is the opposite. So this is what I believe we're seeing right now. This is where it gets exciting and scary at the same time. You know what? Also, I'll try and remember to tell you guys what I'm doing to prepare for this. Okay, I just type in margin call, right? These are the headlines that pop up, a quick Google search. This was out 7 days ago. We talked about the margin calls that were going on in the European utilities. And I've told you that as Europe collapses, we're about 4 to 6 weeks behind them in a crash because we're so tied into them, okay? Literally, over $1 trillion in margin calls. Matter of fact, last time I checked, it was $1.5 trillion in margin calls. All right. That is very scary for a fund. Very scary. And so what do they do when they're getting margin called? Because they went too speculative on their bets and they lost. They have to sell assets to be able to pay those margin calls. And I believe that what you're seeing is weakness in the gold, the paper, gold, silver markets, because that has historically been an insurance policy for companies. All right. So you're seeing the paper shares trading down. Now, this is where it gets really exciting. I've told you many times, I did a video in January that said, I put out this chart. We'll start with this chart. I put out this chart and I did a video and I literally showed you that this year was going to identically mimic the 2008 year for the Dow Jones and also gold. All right. So now let's look at this right here. So the stock market actually topped in mid 2007 and started to trend down with the news that the mortgage-backed securities were quite a fiasco. This was getting bad, right? And so slowly but surely, companies were experiencing margin calls and they were having to sell things. And slowly the market started to realize, oh no, this is bad. We're going into a recession. Little did anyone know that it was going to be a great recession, but people like myself that had sold all of my real estate, honkering down, getting ready for the big one, literally losing friends, as I was telling people, you are going to lose. The housing market's going to crash, which means you're going to lose in all kinds of different aspects. Well, you know, the Dow Jones went from a top around almost 14,000. I think it actually touched 14,000 to where it bottomed in 2009 in the spring, right? To 7,000, literally taking 50% off that index. So a lot of people's wealth effects were destroyed, both in their housing value that it went down and in their 401ks, their IRAs, all of that stuff, right? So there's stock accounts. Well, what's really interesting is that right now, to say that this time is different, it is. See, the stock market during the dot-com buildup and during the housing market buildup lost about 50% of its value twice. But it can never happen again. It's all you've been told. But ever since 2001, we have seen the Federal Reserve have rock bottom interest rates when it comes to Fed fund policy. So everything was cheap. Lending was cheap, right? Money was cheap. Now it's about to happen again. Now in 2015, and I've talked about Shemitah cycles and all that kind of stuff before. In 2015, it was supposed to happen again, but the Fed started raising rates pretty aggressively, 25 basis points or 1/4%, about every, I want to say it was every quarter for 2 years. And that shaved off about 20% of the Dow Jones average in, I think it started, October 4th of 2015, ending around Christmas Eve, because that was when the Fed pivoted and they went from a raising to a lowering. All right. So right now, the Federal Reserve has told you we are going to keep raising, but the market is not going to be able to handle that. And it's happening very quickly because not only are we in margin calls because of poor decisions on fund managers going out and aggressively gambling on the price of energy, and they're losing, right? So they're getting margin called. They're also doing it in other areas of the economy. Now let's do this. I talked about this again in January, and that's why it's important to watch all the videos, because I put out so many darn videos, right? That's why the subscribe button is pretty important to people who are trying to stay up with this. I explained this formation, right here, this formation right here. This is the year 2008, start to end, right? The gold price ticked up right at about $1,000, came back into a little bit of a correction mode, and then briefly almost got to it again. And then this is what happened from June until January, okay? But what's interesting is it found its bottom right after Lehman Brothers, about 4 weeks, 5 weeks after. I've talked about this a lot, right? And I said, watch this pattern, and this is why you should go take Johnny's course and not mine on technical analysis. But you see frequencies and you see patterns all throughout the world, especially in business, because business and the economy is built up and destroyed based off of human emotion, how humans feel, is the economy strong or isn't it, right? So when paper gold sold off because companies were being margin called because of the stocks crashing, right? Because of the mortgage-backed security fiasco, it found its bottom way before the stock market. Remember where I said the stock market found its bottom in the spring of 2009? Well, gold bottomed in October, November, around there, of 2008. And then it started, and I've said this before, a multi-year tirade. And people are like, they like laugh and they go, a multi-year tirade? Yeah, that's what it's called. When it finds a bottom at the end of 2008 and it finds its top in 2012, okay? I said, and I'm going on the record right now, okay, and this is why you want to be positioned. See this movement right here? Look at this movement right here. You are literally seeing history repeat itself, okay? And what I believe you're about to see is it's about to bottom somewhere, the paper price, not the gold price. Gold, physical gold is totally different market, and I've talked about that many times. And then it is about to start a multi-year tirade, which I believe I don't even have enough screen space for where it's about to go over the next few years, okay? It is going to be a bull run like you have never experienced before. Why? Because people are going to get scared and they're going to flee currencies as we have this great currency collapse moving into a, what is it called? The new digital currency. All right. Sorry, I'm totally slow today. So it's going to be very exciting for gold holders. In the short term, I still believe, I've said it many times before, you're going to see precious metals, gold and silver, weakened, right, in price. That's why I'm investing in mining stocks, because to say that they are a bargain at this point is an understatement, okay? And that's why I have been diving in the last year and a half, 2 years, and learning everything I can about the mining sector, because I want to find the bottom on the mining stocks, the good stocks, the ones that are, solid discoveries, that are great income producers, things like that. Because when those take off, they're leveraged to gold and silver prices. It's like monetary cocaine. I mean, it's absolutely insane. And this has been proven throughout literally the last 50 to 60 years, when gold and silver go into correction mode and then they take off. All right. So I wanted to explain this to you. This is happening exactly like I said, right? But again, I'm not a financial advisor. I do not sell you prepackaged investment stuff. I didn't go to school to get a name badge to say that I have the legal authority to do that, regardless if they go up or down. But I'm an investor, and that's what I wanted to explain to you. So guys, if you liked this, please share the video, please hit the thumbs up and hit the subscribe, especially if you've been unsubscribed, because there's some weird stuff going on. And please do me a favor, go to the Real Estate Ninja and hit the subscribe button just in case. Why? Because that's my backup channel, just in case something funky happens here. And you've seen throughout the history of this channel, like me calling when lumber was going to collapse and when mortgage rates were going to explode, there's some trends that are very easy to identify. And I just wanted to do a very basic explanation. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.